carefully, responsibly, in an informed, progressive manner, we can build a new world. We can build a new future based on technology, with all the promise and benefit that that can come. All I simply do is draw a series of final comments and conclusions on all of this. This covers all of the new crypto world, all the key aspects within it, all of the core components. All of this is then developed in the additional supporting materials made available. Okay, everything's on the system. See you next week.
Sorry.
Yeah?
I want to ask, most of the slides on the QM Plus,
They're on there. I put them on, they're there last night.
because the ones that I updated had the audio, not like playing out the slides.
Sorry?
I said the ones that you talked through during class were in your audio, the audio of 22 minutes, not the actual PDF slides.
PDF slides have been taught. There's other older versions of this. I'll check which one's longer and I'll maybe open that as well.
Okay.
All the slides are there. I checked last night. Hi. Hi. Are you teaching?
Yeah.
Oh, sorry, Douglas. You should have come in. Sorry. I didn't think there was anybody there. What class have you got?
Securities regulation.
Oh, wow. Well done. Well done. This was all working absolutely fine.
Good.
Have a great time. I'll see you later, Douglas.
Yeah, sounds
Well,
good.
let's talk outside so we can let the class start. Thanks, Douglas.
Yeah, see you shortly.
Anybody wants to talk, I'll be outside. Let's let the next class in. Please, please, please.
Sorry, it's Daniela.
Douglas.
No, Daniela.
Yeah, he's not here today.
Not today.
Not today. Next time. Yeah.
Yes.
It is indeed. Yeah.
Always go back to my end. Yeah, 69 on my end. Can be better.
When I used to live there.
Treasured memories.
I think it's short. The space.
All right. Good afternoon, everyone, and welcome to Securities Regulation. My name is Douglas Horner, and I will be co-teaching Securities Regulation with Daniele Daviglia. And you'll meet Daniele next week. both of us next week, but Daniele is not here this week. Apologies for the late start. I'm going to have to reprimand George Walker for not letting us have the classroom until after the hour. What I want to do today is begin, introduce what we're going to be doing in the course. Then I want to get started on some of the material, really the baseline in terms of what we're going to be doing, and then move on from there. In terms of the course, mostly what you need is on the QM Plus page. You'll find there, in particular, syllabus, details, etc. And where I want to start is with the first set of slides for the course. And really, if we want to think about securities regulation, and yeah, let me see. It's supposed to be on all screens, but it's not showing. Yeah, no. This happened quite a few times last year as well, where one of the projectors was down. So no, definitely not ideal, I'm afraid.
It's uploaded in QM Plus.
Yeah, it is on QM Plus. The other thing that's not ideal is, believe it or not, there are no whiteboard pens. And so, what that means is for the attendance code, I've actually had to write it in pen on this piece of paper.
Sorry, it's easy. That's down there.
Do you see? Where? Ah, on the ground. Thank you. I didn't look on the ground. Well done. QR
UBC.
UBCU. Well, not to say that they work, but they are there. So that's your attendance code. Yeah, I don't know what is happening with this because it is showing, but that projector is legitimately not on. Nope. Yep, sorry. Less than ideal, but the slides are on QM Plus, and yeah, no, it really is not good from you because you can't really see that angle at all. But not really anything else I can do at this stage. So, essentially, what I want to start out with is this idea when we're looking at this course. One of the challenges is, first, what are securities? And this is something that we're going to look at a bit today, but it's going to be an issue really throughout the course. The second is really from the standpoint of global markets. And when we think about securities markets, we tend to think about markets that are global in nature. But in reality, what that often means is a relatively small number of jurisdictions that dominate from the standpoint of actual market practice and therefore from the standpoint of regulation. And finally, this idea of regulation. And in some ways, if we think about this, the challenge, when we think about global securities markets, is almost everything is regulated in some way. We will see a variety of international approaches, but generally these international approaches are going to be what we think of as soft law approaches, systems which are developed by organizations of regulators, which are then implemented into individual legal jurisdictions. And that's going to be our founding framework. If we want to sort of start from a big picture standpoint, driving themes in global securities markets, we think about the last decade crisis. And this is a theme that we're going to see throughout the course. One, because generally speaking, financial markets tend to be characterized by periodic crises. This includes securities markets. And as we're going to see, much, but certainly not all, but much of securities regulation comes in response to problems that have emerged, which are frequently crises. Certainly the last decade, we saw a massive increase in regulation of finance generally, and securities markets were no exception. Dramatic increases in the amount of regulation, so much so that actually if we want to look at the past 30 years, the single highest growth area of employment in the financial sector has been legal and compliance. So that theme, driving regulation, is something that really came out of particularly a crisis in 2008 and regulatory responses. But we're going to see a variety of other crises. And technology. We can talk about technology in financial services generally, but if we want to think about securities markets particularly, securities markets are almost always the place in financial markets where technologies are adapted first. Why? This is often where the money is to be made, where there are advantages from new technologies or from the standpoint of cutting costs. And so one of our core themes throughout the course is going to be looking at technology and its impact from the standpoint of securities markets, but also from the standpoint of securities regulation. And if we want to look at this decade, really an interesting one, because in many ways what we've seen since, I would say particularly 2016, has been very heavy dominance in global securities markets by US markets, really in a quite striking way. It's something that we'll often say in securities markets, but liquidity drives liquidity. Where the money and investors are will drive the products. And in many ways, the ultimate destination would be to have a single market where investors and instruments all come together. And in many ways, the US market over the past decade has headed in that direction. But like most other things, there are real questions about future directions for markets. And thus, we're seeing certainly efforts in the EU, in the UK, to try to revive securities markets. We're seeing massive growth after a pretty stagnant period of securities markets in Hong Kong and the rest of China, for instance. We've seen massive growth in India's stock markets over the past decade. So we're starting to see the possibility of having a sort of multipolar approach to markets. But it's still the case for the moment that if one wants to think about where is the dominant volume in global securities markets, it really remains in the US. But the question is, in some ways, whether political factors will end up splitting that in some other way. But that's certainly a theme that we're going to be looking at. And finally, from the standpoint of sustainability, and this is one of those areas where we see a tremendous difference in approach between, say, the US versus Europe versus actually most of Asia. Very different approaches to sustainability from the standpoint of securities markets and securities regulation. And what I want to pull up here is this is a list of countries via stock market capitalization. And most of this data for, if we want to look at the top 10, is for 2025. Somewhat amazingly, the data for the US are from 2024. And we actually know that US markets over the past year substantially outperformed. So if we look at this from the standpoint of total market cap, $62 trillion in US exchanges at 2024, substantially more today. And that considerably outpaces what we see in other parts of the world. We can see China at the end of 2025, after a pretty dramatic turnaround over the past couple of years, a fair amount of which has been driven by geopolitical factors driving investors and companies out of US markets and back to Chinese markets, but also certainly from a little bit of tech excitement. DeepSeek. Why would DeepSeek be interesting from the standpoint of Chinese capital markets? What kind of firm did DeepSeek come out of? Quantitative trading hedge fund. That point that I made about securities markets often driving technology, DeepSeek was a tool to analyze vast amounts of data in the context of a quantitative trading fund. And so if one wants to think about some factors that have driven excitement in Chinese markets, a little bit around the new technologies and some of their implications. Japan has had a massive return. India, up and down. Hong Kong, as part of Chinese markets, and if you add the Hong Kong market cap with the mainland Chinese market cap, you're in the neighborhood of 16 trillion, but still that's a long way off of those US figures. Canada, France, United Kingdom, all in the neighborhood of 3.5 trillion in market cap. Then we start to get of some new markets. Saudi Arabia is particularly interesting because Saudi over the past several years has largely created a new capital market. And so this is something where you have had a system, but it's been expanded very dramatically. Taiwan, a lot of this has been driven by TSMC, of course, in the semiconductor context. And then you get a range of others. But we're largely going to be focusing from the standpoint of top 10. And if we are thinking about securities business, if you are working in a law firm that focuses on global securities markets, if you're working in an investment bank, where do you tend to be? You tend to be in the US, you tend to have something in Hong Kong, you tend to have something in the UK or Europe. And that's pretty much what we're going to focus on from the standpoint of jurisdictions. We're going to be looking at UK, obviously, EU, US, and also Hong Kong. Why not mainland China? Because honestly, if you're doing it from an international standpoint, Hong Kong is your center. The mainland is a very different market from what we see internationally. India, big market, but still very domestic, starting to grow in terms of participation of international firms, but at this stage, easier to focus in on that set of markets: UK, EU, US, Hong Kong. Okay. The whole tech setup is not working very well today, if I'm honest. All right. So, what are we going to be looking at? We're going to start from today looking at this idea of global securities markets and their regulation. One of the challenges that's going to come up repeatedly is that firms, businesses tend to think of this as a global market, but it's really not. It's based in a series of different jurisdictions with different rules. Those rules are often harmonized at an international level, but not necessarily. The second aspect that makes life particularly complicated is that each jurisdiction's regulatory structure is different. So in other words, if we think about the jurisdictions we're going to be focusing on, we can think about in the UK, the Financial Conduct Authority is the primary regulator that we'll be looking at. But the FCA does more than just securities regulation. Likewise, if we think about the FCA, it doesn't really do safety and soundness, prudential supervision of the largest firms. That tends to be with the Bank of England and the Prudential Regulatory Authority. And as a result, generally speaking, we're not going to be covering prudential regulation of securities firms. We're going to focus more from the standpoint of conduct. If we look at the US has the SEC, the Securities and Exchange Commission, and the SEC is very much focused on securities regulation. It doesn't really do anything outside of securities regulation, which means that when we look at the SEC and the FCA, they don't perfectly match. When we look at the EU, life gets complicated because, of course, you have your domestic authorities, but you also have ESMA, the European Securities and Markets Authority, which is the EU-level authority and one which is being given increasing direct remit at the European level. So, if we want to think about, for instance, the SEC versus ESMA, we can think about the SEC in the United States as a federal regulator. Its remit covers the entire country. But it happens that you actually have some state-based regulators in the US as well, in Texas and a number of other jurisdictions, but we're not really going to be bothering with those. We'll just focus in on the SEC because this is the one that from an international standpoint you will mostly be dealing with. ESMA, of course, is not quite a federal regulator, but it is taking on increasing powers at the EU level, but you still do have divisions between it and the individual member states. And finally, in Hong Kong, you have the Securities and Futures Commission, which means that it covers securities as well as a range of derivatives products, which would be caught by the FCA and ESMA, but in the US might actually go to a separate regulator, something called the CFTC, the Commodities Futures Trading Commission. The end result is that one of our challenges with securities markets and securities regulation is that different regulators in different jurisdictions do different things. And so that means that we're looking at a somewhat inconsistent picture. Next week, we'll be focusing in on sort of international aspects. And we'll be focusing on a number of organizations, but the primary organization we'll be looking at is one called IOSCO. IOSCO is the International Organization of Securities Commissions. And essentially, it is an industry association of securities regulators. But for those of you who've studied banking supervision and looked at things like the Basel Committee, IOSCO is a very different structure. Its membership is almost universal. Almost every securities regulator in the world is a member of IOSCO, and so it's quite interesting from the standpoint of some of the standards that it produces. And if we want to look at the first set of readings you have, I've actually given you a document from IOSCO called The Objectives and Principles of Securities Regulation. And this is kind of handy in that if one wants to think about what is securities regulation, this is a useful summary. Now, from the standpoint of actually reading it, unless you know something about the subject, it doesn't necessarily tell you that much. But in many ways, if one thinks about it from the standpoint of this course, we'll be looking at most of the pieces that are covered by the objectives and principles. So that the hope is that by the end of the course, when you look at those again, that you will basically be able to understand the relationship between their sort of broad discussions and what we see in reality in markets around the world. We'll then also look at one aspect that is particularly internationalized, and that is we talk about global offerings, securities offerings. And in an ideal world, one would be able to offer securities to investors all over the world in the same manner. The reality is you can't really do that. Different jurisdictions have different rules about access from foreign investors. But there has been a lot of effort from the standpoint of standardizing certain aspects. And we'll focus in the context of something like a global offering. One of the core processes that one does is the production of a prospectus. A prospectus is a document which contains a vast amount of information about the issuer of those securities. And we've had a lot of work in the context of trying to standardize the content of prospectuses so that they can potentially be used in multiple markets. And if we think about a prospectus contains two main types of information. Non-financial information, which is information about the company, what it does, its management, the various sorts of risks, its strategies, etc., and financial information. And financial information, if you think about it, has actually been one of our most successful areas of international standardization and harmonization. We'll look at this later, but if you want to think about it, basically in the world today, we largely have two systems for preparing information for listing processes, accounting standards. Basically, one set which most of the world uses, which we think of as international accounting standards or international financial reporting standards. And where's the other set? Who's got the biggest capital market? Yeah, the US has their own set of accounting standards. It's kind of a pain, but the reality is, like having a common language, if you just have two sets, it's relatively easy to figure out the differences between one set versus the other. We've tried for a long time to bring the two together. That kind of fell apart in 2008, and everyone has kind of given up on that process. But from the standpoint of information, and something you're going to hear over and over throughout this course, is disclosure requirements. The requirements for information that must be provided as part of the listing or trading process. And the good news is most of the world is using one set, the US is using something else. We'll then turn to the FCA. We'll look in a bit of depth at the evolution of securities regulation here and its comparisons to some of those other big markets. We'll then turn and look at intermediaries and participants. In other words, how are intermediaries and participants licensed or authorized in our major jurisdiction? And this is going to cover both things like brokers and dealers, but also things like exchanges. Exchanges are really core participants to securities markets, and they are very often not only heavily regulated, but also involved in regulatory processes. Conduct of business. In other words, the requirements that come with being licensed to do securities business in those major jurisdictions. Market abuse and market misconduct. And particularly from this one, we'll be looking at something we call RegTech. RegTech is the use of technology for regulatory purposes, particularly compliance systems. And capital markets, securities markets, are one of the areas where we've seen the greatest use of technology by firms to monitor their own compliance, but also from the standpoint of supervisors to monitor the compliance of firms. And I just want to pull this one up because I think it is interesting. What is this? This is a proposal from the UK FCA on transaction reporting. We'll look at this in more detail, but I think this is interesting because it creates a little bit of context. The FCA receives over 7 billion reports a year used to support the cleanliness, transparency, and resilience of UK markets. That right there explains why legal and compliance has been your fastest growing area of financial services compliance over the last several decades. Who is producing those 7 billion reports? It's the financial services industry. It's legal and compliance departments, teams which are as a result of regulatory requirements having to make reports to the FCA. Now, think about it from the standpoint of the FCA. What do you do with 7 billion reports in a year? That's a lot of information. And so they spend a lot of effort these days thinking very carefully about how that information comes in. What they don't want, paper. They want digital submission, they want those submissions in standardized form, and what this process is about trying to eliminate some of the things that for whatever reason they've discovered over the years they don't really need, so that they can reduce some of those requirements and, from the standpoint of the financial services sector, reduce some of the costs of reporting. So, this area of compliance within firms, particularly reporting, is something that we're going to look at. And we'll look at this from a variety of different angles, including things like insider dealing and market manipulation. We'll look at European securities regulation, in particular ESMA, but also efforts ongoing to improve European capital markets union. And this is one of those areas where certainly if we want to look at this year and sort of the relationship between the US and the EU, one area where the EU wants to be more independent from the US is in the context of its capital markets. The ability to raise funds to support its own development without necessarily having the risks of being reliant on US capital markets. And certainly we're seeing China, India, a range of other jurisdictions looking at similar sorts of issues. Regulation of information intermediaries. So we start to look at why regulation. Something that comes up constantly is information. And part of the value of information is standardization. In other words, if you have two companies and they report their financial information in different ways, it's hard to compare those as investments. Life is a lot easier if they have similar sorts of financial statements, which you can compare side by side. Similarly, you want to be able to depend on the information. And this is often things like accountants, auditors, credit rating agencies. These are what we think of as information intermediaries, and a substantial amount of regulation focuses on their performance so that we can better trust the information being provided to markets. Digital assets. This is one of those areas that is going to come up frequently throughout the course as they become increasingly subject in more and more jurisdictions, often to the remit of securities regulators. In Hong Kong, this is already the case. If we look at the US has legislation pending to clarify regulatory authority over digital assets. The EU is mixed. You have similarly in the UK pending proposals. And this is something that, as we think about that definition of securities, has provided some really interesting challenges to regulatory systems around the world. Are digital assets securities, or are they not? And therefore, from the standpoint of regulation, how should they be treated? We'll wrap up with a discussion of special purpose acquisition companies. Overall, the objective is that you'll have an understanding of global markets and the major jurisdictions that you would be dealing with in a practical context by the end of the course. And we'll focus, as I said, on those major markets because those are the ones that typically, in the context of an international practice, come up over and over. Differences between domestic practices and generally outside of the UK, we're not going to be focusing on domestic practices, but more from the standpoint of cross-border. Learning activities. You have in the syllabus a list of different books, and more or less each of those covers in a slightly different way the subjects that we're going to be looking at. And you're more or less welcome to pick up any of those as a starting point. But each week we will also be distributing certain materials, often in my case, which will focus on technological aspects of markets and their regulation to try to, if you will, match those a bit more to reality. Second, as you've already seen, we'll be looking at a number of news stories pretty much every day. Securities markets, if we think about the financial news, this is what they're dealing with. And so almost inevitably every day there is something that we can look at, and we will use those as examples. I'm actually just going to pull up one right now, which is kind of fun. Financial Times. Financial Times, there's a free Queen Mary subscription worth taking a look at. Come on. All right. It's not working as smoothly. IT is not our core thing today. So what I'm going to do is I'll just do this one from the headlines. So what's the headline? Trading 212 sold crypto-linked securities without authorization. So it's a digital asset question. This is linking, in this case, digital assets to securities. And this is a firm which has done this without the necessary authorizations. That would be a criminal offense, and therefore we're seeing enforcement actions. So from the standpoint of a little illustration of what we're looking at throughout the course, this is a nice one. And of course, if you are a firm like this, you're challenged because you really want to operate a global business. How do you actually deal with the fact that actually each market has its own selling restrictions? And I'm going to pull up. We'll come back to these in some ways. This is, in addition to the news stories, a series of firms that I will tend to refer to throughout the course. Now, I'm just going to pull up Coinbase. And look, hello UK, meet Coinbase GB. In other words, I've tried to use the US Coinbase site, and it sent me straight to a UK page. And essentially, this is something that we'll see very commonly, that firms, because of different regulatory requirements in different markets, if they are seeking to be compliant with regulatory frameworks, will actually set up their online marketing efforts so that they are segmented on the basis of IP and locational information. So Coinbase, of course, is listed in the United States. It's a listed crypto, and we always use the word exchange, but in most cases, I don't like using that for the simple reason that what we're going to see in this course, securities regulation, is the word exchange is a technical legal term. It's like securities. And calling yourself an exchange without a license or authorization is problematic. But if we look at Coinbase, Coinbase in fact is a listed company. It has listed on US stock exchanges. It has registered its securities with the SEC, which are then available for trading, and that brings with it a variety of compliance obligations. Let's look at from my other list, because some of these will probably be familiar. The first lot, New York Stock Exchange, NASDAQ, LSE Group. These are sort of big exchanges, and particularly NASDAQ and LSE Group, when we look at intermediaries in the course, how they make money is maybe not necessarily what you might think. In other words, think about a stock exchange. How do you think a stock exchange makes money?
Commissions by transaction.
Yeah, so that's one. And one reason I haven't included the Hong Kong Stock Exchange here is the Hong Kong Stock Exchange actually is a kind of boring exchange. It makes almost all of its money from listing fees and trading fees. What else, if I wanted to say, NASDAQ and the LSE, they don't make most of their money from trading. Where do you think they might make money from?
Listing process of companies.
They make a little bit, but it's not the big one. Yeah, data and indexes. Selling their information. In other words, if you are a trading firm, you will pay for a data stream from NASDAQ and the LSE. There's a funny court case going on in the UK right now with a couple of hedge funds that want to be able to locate their communications link on the roof of the LSE. They want to be able to receive the trading data as rapidly as possible so that they can use that from the standpoint of potentially getting a market advantage. And if we look at NASDAQ and the LSE, their biggest source of income is selling data, selling information. So at the end of the day, when we talk about securities markets, information is what drives those markets. They also both sell consulting services and operating systems. A good chunk of the world's exchanges run on trading systems from NASDAQ. A good chunk of supervisory systems from monitoring exchanges around the world, those are sold by NASDAQ. So consulting, technology, advisory services. Both of these are big AI firms, big investors in artificial intelligence, which they then use from the standpoint of data analysis. Goldman Sachs, UBS, yeah, these should be pretty familiar. These are your sort of boring incumbents. BlackRock. BlackRock is an interesting one because if we wanted to think about 15 years ago, we probably wouldn't put it up, but today they're the world's largest asset manager, and it also happens that they're a major seller of trading systems to financial firms around the world. So BlackRock, with its trillions of dollars of assets under management, is going to come up periodically. Coinbase, I've already mentioned. Now let me ask you about these two. Citadel and Jane Street. How many of you know Citadel? Just one. Couple. Good. Citadel is in the context of the markets we're going to be looking at, they're the single largest counterparty. They make up about a third of all trades on every day on the New York Stock Exchange and NASDAQ. It's a gigantic trading firm. Jane Street does something similar. Both of these firms are very heavy tech-driven, very heavily focused on regulated exchanges. Jane Street recently has been in the news because of some enforcement actions in India as it's tried to expand its international approach to the domestic Indian markets. It's ruffled some feathers and certainly some questions about the way that it operates. And so these are two firms that actually Citadel was only formed at the beginning of this century, and Jane Street is less than 15 years old. And these are amongst the largest traders. And it happens, Citadel and Jane Street also pay amongst the highest salaries in the financial sector. So true to make sure that you've at least heard of. In addition to the firms, regulators, let me give you these. We'll look at, that's IOSCO. We won't look a lot at the Financial Stability Board. ISB sets international financial reporting standards. We'll look a little bit at this, particularly as we get to sustainability disclosure, because it also sets international sustainability standards, which we're seeing increasing action on. The FCA, ESMA, SEC, and Hong Kong Securities and Futures Commission. Now, I have actually included on this slide a couple of pieces of legislation which we will refer to with some frequency. The first in the UK, Financial Services and Markets Act 2000, which is the primary piece of legislation governing finance, but in particular securities. In the US, you get what we call the 1933 Securities Act and the 1934 Securities Exchange Act. Take a look at those dates. It's no coincidence that they're just a couple of years after the 1929 crash. They are direct reactions to problems that were seen at the heart of that stock market crisis. And as a result, a good example of what we will often see, that securities regulation is a reaction to other forms of crisis. And something we won't look at that much, but we will occasionally pick up from the Hong Kong Securities and Futures Ordinance. In addition to Daniele and myself, in addition to the readings, the news stories, the various websites, we will have a series of guest lectures throughout the course. First two, one from ABN AMRO, another from Citigroup. And we'll probably have two or three more that we've yet to sort of firmly commit. And it's always good to get sort of perspectives of people who are working day to day in these sorts of markets on what they're doing, what they're seeing. So we'll have a fair amount of that. Assessment. The assessment is an essay. We don't have the final dates yet. Those will come out sometime, usually around March. Basically, the idea is that we'll give you 4 or 5 questions. You will pick one of those, and with a maximum of 4,000 words to answer. In the context of references, footnotes will count in the word count. Bibliography will not. So that's more or less what we're going to be doing, how we're going to be doing it. Questions, comments on anything?
Is it a 24-hour exam?
No, it's actually longer period. So you've got longer, but the final time isn't set yet. Yeah. Others?
What is the timing before writing more words? Because I tend to do that.
We do that, one, to keep people from, if you don't, I've always found over the years, if you don't have that word limit, you'll get essays that are ridiculously long. And it's actually gotten worse with AI because they will just grow to massive lengths and people will submit a book. So we always set the word limit to basically force people to focus in. Yeah. Others? All right. What I want to do now, take a short break, and in terms of class structure, generally we'll take a couple of short breaks across the class to sort of make it as effective as possible. So let's take about a 10-minute break, pick up at 10 minutes after 4 with the next section. Hey, send me an email, and then I'll. It's on the slides. It's douglas.arner@QMW. Yeah, so you'll just find it on the slides or on the QM Plus page.
See where we submit our work for the essay. Is it going to be? I realize there's a different way to submit. 2 different ways. It's like one that you submit on you have to like copy and paste your essay onto it. Is that the one that you have?
I'm not sure. I think you have. I think it would be an upload system rather than a copy.
Yeah. How comes? Yeah. I'm an undergrad. We didn't do your footnotes counting to those words. How comes that happens?
It's because, as you'll see in U.S. law journals,
Yeah.
the footnotes will be thousands of words.
Okay. That's
So if we don't count the footnotes, you end up.
My recent one was like 65 and things.
Yeah, exactly. So that's the reason. Hey, yeah, sorry about the screens. I have no idea what's.
Hopefully, let's see where the road takes us.
There's certainly at the moment a lot of business.
But I have a question regards to the FSMA and the RA. Will that cover both the parts of exemption that are applicable to lawyers to or will it only sticking in terms of what the FCA is?
It will cover to that.
Arrangement management.
Yeah. They will also specify the exemptions. And you'll see the same thing with the 33 Act and the 34 Act. Unless they specify the exemptions.
With respect to the MLR or anything, will that also be taken care of? Will that also be a part of this? That comes outside the aspect of, that's basically
Yeah.
this thing which comes without
Yeah,
security.
a little bit outside. So yeah, really. Good, thank you. Good. I got it.
I've got 100% basically, birds are yeah, that's it. Oh, you from the already? Oh. So, we haven't come next week. There last year.
I'll say it's going to come back. Yeah, good. I had I used points, so I had free tickets. He was, but yeah, it's completely weather, but I get no start with this stuff. We've friends now, we always talk. They're from Estonia originally. They're living in Dutch for a few years.
If the sun shines, do it from this every cafe where the time window is for the summer.
Oh wow, yeah, that's a very precise list.
Some nerd has like figured it out with it's embarrassing.
Well, yeah, I heard
Me, you go often. Twice a month.
it's not twice.
You go.
Yeah, just every time. So we're doing business.
Friends live.
A lot of friends and my family.
It's a problem.
Yeah, no. Does anybody have a
USB-C?
no?
Oh, okay.
This is why you need to change phone. Let's say you don't have a bad one.
Yeah.
You want one?
Oh, wow.
I need to change my phone too. Well, the big problem is my battery lasts about half.
Just check outside. All right, let's go ahead and get started. Basically, in the first part, I wanted to talk about what we're going to be looking at, how we're going to be doing it. And I think a little bit of framing and terminology is a useful place to start. And as I said, when we think about securities markets are highly globalized, highly digitized, and highly regulated. And there are reasons for all of these, but to understand what is going on in markets, one has to have an understanding of each of those pieces: the globalization, the technology, and the regulation. And a starting point is this idea that when we think about financial markets, the idea is that those markets will allocate resources on the basis of price. Efficient pricing results in better allocation, which then supports higher growth and wider development. That's the basic idea. And most of regulation in securities markets is about a combination of two things. The first is how to get those markets to work better. And often when we think about this, we think about this, the efficient markets hypothesis. This is a finance theory that everyone agrees is not accurate. Now, why is that important? Because a fair amount of regulation is designed to try to get us closer to what everyone agrees is an impossible ideal. What's that ideal? Essentially, the idea is that markets will reflect all information through prices, with prices providing for efficient allocation. And so, a fair amount of regulation is about trying to get better information to markets to enable them to function better. Quite a lot of regulation actually tries to address issues around the fact that the assumptions don't reflect reality. So in other words, your assumptions, one side is that you have perfect information, and in the real world we don't. But those efforts to have disclosure requirements through prospectuses, pricing mechanisms through exchanges, etc., those are all about improving the quality of information so that markets work better. And in securities, a big chunk of regulation is about information disclosure, information requirements, information quality, all of which is designed to make better information so that markets work better. Second is around efficiency. Transaction costs. These are costs of making a transaction. And in the context of securities markets, one of your costs is matching buyers and sellers. And so we have a lot of focus from the standpoint of exchanges and trading systems on trying to make those as efficient as possible, and often by setting standards, standardization, etc., to make systems work better. Now, perfect competition. This is the idea that you can have easy entry and exit and a high level of competition in markets. Everyone agrees in the securities markets that there is a high level of competition. But at the same time, regulation is often about reducing competition. In other words, licensing requirements, this is a barrier to entry. We specifically create barriers to entry in markets for a range of reasons, which largely have to do with something else we're going to see in just a minute, which is behavioral challenges. So, perfect competition is one of those things that we like to say we want, but in reality, through regulation, we reduce it. And finally, prior to 2008, there was often an assumption that in at least financial market regulation, that either market participants, people, were rational or they should be rational. And if you have that as an assumption that people are rational or they should be rational, then many of these requirements around disclosure systems, efficiency, this all makes sense. But since 2008, we've had to increasingly come to terms with an inconvenient fact established by neuroscience and a range of other disciplines, which is that people aren't necessarily rational. And that then poses a challenge from the standpoint of regulatory design. If everybody is rational, then we can design systems on the basis that people will behave rationally, we can give them information, we can give them better systems. But what we now know is that generally speaking, people tend to be overly optimistic and underly pessimistic. We tend to think things are more likely to turn out well than they are, and that bad things are a bit less likely to happen to us than perhaps they are. And the end result of that is that if we assume that people are always rational and we design regulation on that basis, it doesn't necessarily achieve the desired results. Let me give you a simple example. Retirement savings. It's pretty easy to predict what our expected lifespans will be. It's pretty easy to predict what our expected working spans will be. It's pretty easy to predict how much money we will need after we stop working in order to carry on for, in most cases, several decades after retirement. But if we leave people to plan themselves, they very rarely do. It's always, we'll spend now and we'll save later. It's something that can always be put off. And so, in the context of retirement savings, most countries have mandatory systems to require people to, via their firms, employers, a variety of other systems, put aside a certain amount so that you don't end up with the problem of a decent percentage of your population that is old and doesn't have enough money to survive on. Rationality allows us to take a rational decision, but we don't do it. And this is something that we see over and over. Prior to 2008, we generally would say people should be rational, and we will design systems on that basis. One of the classics, and you'll talk more about this, I'm sure, next week, is those prospectuses. Anyone ever read a prospectus? Yeah, don't feel bad, almost nobody ever reads one. The bad news is if you end up doing sort of IPOs and due diligence in a law firm, you'll have to read prospectuses. But the reality is most market participants don't read them. And that is one of those things that rationally we spend all of this time and effort preparing the information in those documents so that investors will read it and use that to take informed decisions about investments. But generally speaking, most investors never read the prospectus. And so there's a real question about whether that effort actually has an impact. Generally, there is a view that having the information in the markets is a good thing, and in particular, forcing firms to make sure that what they're saying is true benefits investors, even if investors never read it. It's better that the information is true and could be used than to simply have firms making it up because nobody is ever going to read it. But this, from a regulatory standpoint, is a key change from the period prior to 2008 to regulation today. Often we're not assuming in regulation today that people are necessarily rational. In many cases, we're trying to take into account the fact that they may not be, and then design regulatory systems which try to minimize the negative impact of that non-rationality. So, if we think about this, one aspect of regulation is about trying to get markets to work better. Another aspect is actually really related to that rationality point, which is that, as I said at the very beginning, markets are subject to boom and bust cycles and periodic crises and crashes. If market participants were always rational, you'd probably have less of these, but there tends to be a cycle of boom and bust. And a real question right now, what's the question in markets right now? What is the bubble that people are saying maybe we're in? Exactly. Unknown. Maybe, maybe not. History would suggest that there is typically what we would call a Gartner hype cycle. Gartner hype cycle basically says we're overly optimistic about a technology. Market prices go way, way up. We eventually realize that it's going to take a lot longer to have the impact that we're expecting than we're expecting. You will then have a price correction, and then over time, it'll come back up, and in fact, the impact may be bigger in the long term than the short term, but that's a sort of cycle. Think about Google, Amazon. These were companies that listed in another bubble, the dot-com bubble of 2000. And when they listed, there was this massive optimism about what these companies could and would do. But honestly, nobody would have said then that Google or Amazon would have the dominance that they have today. That's the cycle. So, the end result is a good chunk of financial regulation is about these sorts of crises and problems. But there's also one other aspect, and that is that whenever you have finance and financial markets, you have fraud and crime. There's a famous quote from a US bank robber. Why do you rob banks? Answer, that's where the money is. And if we think about securities markets, almost as soon as you get securities, you have fraud and crime. And so core to regulation is actually trying to address the fraud and crime that comes along with money. And that gives us, in many ways, most of our regulatory framework. Irrational behavior, imperfect competition, transaction costs, information quality, what we call externalities like crises. We take that as market functioning, fairness, dealing with fraud and crime, developmental objectives, financial stability, but overall making the markets as trustworthy as possible. Why? Because at the end of the day, if you trust the market system, you're more likely to put your money in. And if you put your money in, more likely that they're going to have the developmental benefits that we're looking for. And this is why in securities markets, we actually have a long history of what is called self-regulation. In other words, market participants, like brokers and dealers, realized that it's in their self-interest to get people to trust the system. They'll put more money in, and if people put more money in, the professionals make more money. And so there's an interest in developing systems to police bad behavior to enhance trust out of self-interest. But it is the case, if we look at finance, over the past 150 years or so, what in most cases started out as mainly a self-regulatory system is almost entirely today legislative regulation. Usually there's been some sort of conflict of interest, misbehavior in a range of cases, and each time you've had that, you've had a response with, in most cases, a state-based legislative regulatory approach. What I've put on this slide is something that we'll see throughout the course. And essentially this is a set of regulatory objectives. In other words, these are the primary reasons we regulate financial markets generally. Now, the challenge I mentioned earlier is that securities markets are a subset, and different regulators have different sets of objectives. And so what that means is that these objectives may not be present in a given securities regulator, but they will be present somewhere in the system. So, monetary stability, core function of a government in most cases, is to provide a stable, trustworthy monetary instrument. And generally speaking, this is a role of central banks. It's not something that we typically see securities regulators function. But sometimes there are exceptions. In 1997, in the midst of what is called the Asian financial crisis, speculators were essentially short selling Hong Kong stocks in an effort to put pressure on the currency peg, where the Hong Kong dollar is linked to the US dollar, in order to take a bet that the currency peg would break. So, in some cases, there may be a linkage. What was the eventual response of the Hong Kong government? The eventual response of the Hong Kong government was to buy large volumes of Hong Kong listed securities in order to stabilize the stock market to protect the currency. So even in securities markets, sometimes this monetary stability objective comes. Another time it may come is, for instance, worries that a crash in stock markets could cause failures in the banking system. 1929 in the United States. Essentially, you had financial conglomerates firms which were a combination of banks, securities firms, asset managers, and insurance. They were taking very heavy positions in the markets. When the markets collapsed, many of those firms failed. That in turn caused the collapse of the banking system and the wider economy, with impact on monetary stability. So sometimes, even in securities markets, this does come up. Financial stability. Financial stability is something that, if you think back to the 1970s, generally speaking, people wouldn't have thought that financial stability mattered in securities markets. But if you think about the failure of Lehman Brothers in 2008, clearly a failure in securities markets can have financial stability implications, and so this tends to be both a banking objective, but as we'll see, it's also a securities objective. Efficiency and transparency. Clearly, this is something that securities regulation focuses a lot on. Investor, consumer, depositor protection. Core function of securities regulation, protection of investors, particularly from fraud and misconduct. Markets work better, people put their money in. Market integrity is all about money laundering and criminal use of the financial system. We're not going to be doing much of that. Finally, something that we will see, a variety of growth and development objectives. We'll see with the FCA that the FCA has a competition objective. It also has an innovation sub-objective. We'll see with the SEC in the US that it has a very common objective in securities regulators, which is capital formation. In other words, regulation is actually about helping to develop capital in an economy which can then support productive investment, which supports the wider growth and development of the economy. And if you think about Capital Markets Union in the context of the EU, clearly one of its objectives is going to be capital formation to support investment and innovation to drive growth and development across the bloc. So, this is something that we'll see these in a variety of different forms. And one of the challenges, as I've said repeatedly, no single regulator has the same set of objectives. But generally, these objectives are embedded somewhere in the system. This slide, this comes from the IOSCO objectives and principles of securities regulation. And essentially, this is the agreed set of international standard objectives, which basically most regulators in the world incorporate in. And you get three. Enhance investor protection. To enhance investor protection and promote investor confidence in the integrity of financial markets by strengthening information exchange and cooperation in enforcement against misconduct and in supervision of markets and their intermediaries. So one aspect that we'll see with securities regulators, and if you think about the name, Financial Conduct Authority, the name says it. It's about enforcement. It's about policing conduct. And this is something that there is an expectation with securities regulators that there will be enforcement to police conduct in markets, but that also goes with information to make those markets function. Ensure markets are fair and efficient. To ensure market structures do not unduly favor some users over others, and that investors are given fair and transparent access to market facilities or price information on a real-time basis. A big focus on trading, how markets work. And something that we're definitely going to be looking at are, in the US, pending, is a new market structure bill which is focused on market structure in digital asset markets. Something that we're going to see a lot of is in the context of what is called clearing and settlement. Clearing and settlement. This is kind of a funny thing. Think about buying and selling a stock. So in other words, you go to your online brokerage account, you buy shares in a given company. Now, there are actually 3 different pieces to that transaction. One piece is the matching of the buyer and the seller via whatever market system it may be at a certain price. That's essentially the trade. The second aspect is actually transferring the ownership of the security from one party to the other. That's settlement. So you've got the trade, you've got the transaction, you've got the settlement. And today, in global markets, settlement is usually on what we call a T+2 or T+3 basis. What does that mean? It means 2 or 3 trading days after the trade. So in other words, you buy a stock today, that won't actually settle for a couple of days after. And there's a big lag. We spend a lot of time on this idea of risks in the settlement process. There's a global effort right now to move to T+1 trading in major markets. In other words, the idea that settlement would take place by the next trading day to reduce some of those risks. So that's 2 pieces. One piece is the trade, the second piece is the settlement, the third piece is the payment. In other words, that payment is actually separate. In other words, it's not necessarily matched with the trade, it's not necessarily matched with the settlement process. And this is another area. We have to think about how all 3 of these pieces go together. And that is what we're talking about when we're thinking about market structures, pricing, and also resilience, which is our third objective. Promote financial stability by reducing systemic risk. To promote and allow for the effective management of risk and ensure that capital requirements are sufficient to address appropriate risk taking and allow for the absorption of some losses. During periods of instability, to facilitate the rapid and accurate exchange of information across jurisdictions, to minimize failures or the impact of that failure at an international level. So, from the standpoint of securities, focus on investor protection, efficiency and fairness, as well as systemic risk, but knowing that for any given regulator, it could also have other objectives, frequently capital formation, market development, could be a variety of others, embedded in its mandates. So, a little bit of terminology. We'll often talk about transmission mechanisms. How does money get from those who have it to those that are looking for it? And we'll often talk about intermediaries. Banks are classic intermediaries. Exchanges are intermediaries, but intermediaries which are designed to match participants directly. But of course, as we just talked about with your online broker example, you may be using an intermediary which then deals with other intermediaries in the context of that market. I use the term IPO, initial public offering. IPO is an initial listing of securities on a market. That's a primary offering. The first time those securities are sold into the market. What takes place in markets after that is secondary markets trading. In other words, buying and selling of those securities after the initial offering, that is secondary market activity. We've talked about exchanges, and of course we're going to look more at those, but you also have over-the-counter markets, which could be direct trading, or what we often talk about today are peer-to-peer markets. In other words, mechanisms where individuals or firms, many of our peer-to-peer markets are actually for large wholesale professional investors who deal with one another directly and negotiate prices outside of the exchange context. So that could be peer-to-peer, or it could be an exchange-based market. Financial markets. A little bit of terminology. We're basically focusing in on what we think of as capital markets. Commodity markets are frequently subject to securities regulation because many commodities derivatives, futures and options on commodities like gold or wheat. We had a crazy market in silver overnight. These are frequently caught by securities regulation. And so we'll look a little bit at those. Currencies. Currencies, these are markets for currencies, buying and selling money. Generally, these won't get caught by securities regulation, but you could have derivatives. You could have options or futures on currencies which may be caught by securities regulation. Money and interbank markets. Generally, this is a market for short-term money, money of less than 1 year in duration. And generally, we have relaxed requirements for shorter-term instruments in many jurisdictions. But something that we will be looking at across the course are what are called money market mutual funds. Money market mutual funds, this is a fund, a regulated investment product, which typically owns short-term debt securities, particularly those issued by governments. And at the moment, there's a really interesting set of developments as firms tokenize, bring into a blockchain environment, money market mutual funds, and even questions about whether we are likely to have direct competition between things like stablecoins, which we're not really going to look at because they're not really securities, and money market mutual funds, which actually functionally have a lot in common with stablecoins, but are typically regulated as securities. Capital markets, generally speaking, are markets for money of greater than 1 year in duration. And typically, those will be divided between debt and equity. Basic difference, debt has to be repaid. Generally speaking, equity doesn't have to be repaid. Debt could be in the form of loans, which aren't necessarily freely tradable, and bonds which are generally freely tradable. And both bonds and equity can take the form of securities. Generally, we're going to focus more on equity securities in this course and less on debt, though debt will come up sometimes. This term, securities, is a challenge. And functionally, securities are freely transferable financial instruments. Functionally. But in each individual jurisdiction, you will have a separate definition of what is a security. And that is a technical legal term that is different from jurisdiction to jurisdiction. Generally speaking, there are two major approaches in legal definitions of securities. The first is what we call a laundry list. So many securities regulations around the world, you'll come and you'll see definition of security, and you will have stocks, bonds, debentures. That's a laundry list. Many jurisdictions, that's it. Stocks, bonds, debentures. If it's a stock, a bond, or a debenture, nobody knows what a debenture is. Don't worry. Nobody knows what it is. But if it's a debenture, or a bond, or a stock, then it's a security. But what about digital assets? Is that a stock, a bond, or a debenture? Maybe, maybe not. Many jurisdictions will then have what we call a functional test, which is to say that certain things which are effectively financial products are also caught by securities regulation. Most common, what we call the Howey test, from a case from the 1950s in the United States, which says that there are certain aspects that will make something into a security. In many other jurisdictions, the UK and Hong Kong are examples, you'll have some sort of investment company definition which can catch a variety of financial products. The idea here is that not everything that is a freely transferable financial instrument that comes with the rationales of why we regulate securities, not everything that comes with that rationale is a stock, bond, or debenture. And so, some, but not all jurisdictions, will also have some sort of functional definition. Now, I've actually included the definition from the US 1934 Act, Section 3. And this is something that you will pick up, particularly as we sort of look at UK versus US. US regulation and legislation tends to be very detail heavy. UK financial regulatory approaches tend to be less detail heavy. We would often think of one as more sort of principles based, the other as more sort of law based or rule based. But that's not necessarily the case, but it does come up here, where you get, in this context, the term security means any note, stock, treasury stock, security future, security-based swap, bond, debenture, certificate of interest, or participation in any profit-sharing agreement or in any oil, etc. And then you get a separate definition of equity security in the next section. The term equity security means any stock or similar security, or any security future on such security, or any security convertible with or without consideration, etc. So, what you get in a US context is you get the laundry list, but you also get a definition that covers things that are like the things in the laundry list, but not in the laundry list. But the key challenge from the standpoint of securities markets is the definition in each place is different. And where that has most recently come up as being interesting is that digital assets context, where firms have tried to sell the same thing globally and ended up with very, very different treatment in different jurisdictions. A little bit simpler, this is from the EU prospectus regulation. Securities means transferable securities as defined in another directive. Equity securities means shares, other transferable securities equivalent to shares in companies, as well as any other type of transferable securities giving the right to acquire any of the aforementioned, etc. Non-equity securities means all securities that are not equity securities. EU approach, once again, like the US, is quite broad in terms of catching functionally, but quite a lot of variation here. Now, where I want to sort of wrap up a little bit is this kind of highlights a few key evolutionary dates, and we'll keep coming back to some of these over time. 1637, yeah, it's a long time ago, but this is one of our first investment product bubbles that is properly documented. This is the tulip bubble from the Netherlands, and in many ways this has turned into the prototype of future bubbles. In other words, you have, for whatever reason, over-enthusiasm about tulip bulbs and a shortage in terms of supply. The end result is prices get driven very high. In many cases, people are investing very substantial portions of their wealth in tulip bulbs. And in many cases, they're actually borrowing money to invest in tulip bulbs. Eventually, the cycle comes and the price collapses. The end result is lots of people lose lots of their savings. Many of them are very unhappy about that. And many also who had borrowed money actually cause financial problems for the lenders, which then causes wider problems in the economy and the society. The end result is a call for regulation to prevent this from happening in future. And if one thinks about those discussions around an AI bubble, what is being seen is the potential that it's exactly the same thing, exactly the same cycle. So anytime there is a fear that you have over-enthusiasm about some product sector, etc., there will be references to this Dutch tulip bubble from 1637. What's our next one? The next one is one of our first major regulatory efforts and eventual failures. What is this? It comes from what is called the South Sea Bubble of 1720. And essentially, the South Sea Bubble of 1720 was about a number of companies who were given in the UK, Great Britain at the time, monopolies on trading with different portions of the world, particularly the Americas, and a view that the Americas would turn out to be some massive market that would make fortunes for everybody who invested there. Think about that Gartner hype cycle. They weren't wrong. It just took a little longer than they anticipated. And so many of those companies in 1720 turned out to be failures, or actually entirely fraudulent. There's a famous example of a company called the Sword Blade Company, and it had a prospectus. Yes, prospectuses date back to 1700s. Why? Because it's a mechanism to sell stuff. In other words, if you want to sell something to someone, you will typically, today, you'll typically write a one-pager, which will talk about what it is that you're selling. And that's the basis of a prospectus. So you had a company that said its purpose was to make large amounts of money through a secretive process. It was a fraud. But at least they were honest. They were honest that it was a fraud, that you gave them money, and they were intending to make lots of money in a secret way, which involved basically taking the money of their investors and leaving. We'll look at something called the ICO bubble, initial coin offerings in 2016. Many of these crypto financings had exactly the same sort of objective. So, prospectus regulation, we start around that time setting detailed requirements. The Bubble Act is a piece of legislation that tries an approach that periodically people will argue for in financial markets, and generally it fails. What does the Bubble Act do? It says that what was the cause of the 1720 bubble and the collapse? Joint stock companies. So what's the strategy? Ban joint stock companies. If you make it illegal to establish a joint stock company, then you can't have fraudulent sales of company interests and shares. And every time there's a new product, there will be someone who is saying, ban it, make it illegal. But it rarely works. Generally speaking, if a product makes some sense, people will find a way around or eventually ignore the legislation. That's eventually what we saw with the Bubble Act. Sometime in the 1800s, most people simply began to ignore it. And then we see a move to establish legislation to make it easier to establish joint stock companies. And then a series of pieces of legislation that are about accounting requirements, prospectus requirements, and trading requirements, which is the basis of what we see as securities regulation. I'm going to come back to most of these later, because what I want to kind of wrap up with today is to move from the context and the background to one getting a little bit better idea of who's in the room. So if we could, I just want to sort of go around the room and get each of you to just briefly introduce yourself. Where are you from? Why are you taking this course? And that will then give, I think, a little bit of perspective from the standpoint of some of the things that we're covering, as well as some of the products and issues we'll look at. So, let's start over here.
Hi, my name is Ritu. I'm from India. I've taken up commercial and corporate law LLM here, and I chose this subject because I find it interesting, and a part of it has to do with I previously did it in my job, so I want to learn more about it.
So in India, you were working in sort of securities markets or more commercial law broadly? Commercial law broadly. Okay, very good.
Hi, my name is Yasmin. I'm from London. I'm studying commercial corporate law because I did study a bit of it in my undergrad in my final year, and I really enjoyed it. So it was the one.
Yeah, this is hopefully going to build a little bit on it, but probably a bit of a different perspective than you would have taken before.
Hi, my name is Pietro. I'm from Italy. I'm doing the LLM in Banking and Finance Law. I'm oriented towards banking regulation, more specifically prudential regulation in banking. So the other side, so the transactional phase in aspects.
Yeah, that's going to be the big difference between this and some of the banking regulation courses is we're not going to be looking so much at the prudential side. It's more the market structure, functioning, fairness sort of side. So complementary indeed. Exactly. Unavoidable.
And I'm doing school as well. I'm doing my LLM in banking and finance school, and I'm interested in this course because I studied actually Latin America closely this market, so I'm trying to delve into it.
Excellent.
I'm Sergio. I'm also doing banking and finance, and I'm also Italian. And I'm taking this course because I wanted also to complete my education. Since I'm studying banking and finance, I thought that this course would complete like the broad perception I want to have in the financial market and complete all the other things I'm taking this.
Excellent. Yeah, nope, we've designed it to try to avoid overlap so it should fit nicely.
Hi, I'm Ilka. I'm from Angola. I do commercial and corporate law, and I picked this module because it was compulsory and
Excellent. Well, we'll try to make it interesting nonetheless.
Hello, my name is Valeria and I'm from Bulgaria. I'm doing a master's in banking and finance law. And very similar to Sergio, I think this is the subject that kind of completes the overall view of the master's.
Excellent.
Simon, I'm from France, did my undergraduate at Cornell as well, and I'm doing the LLM in banking and finance law as well, and I took this course here to get a global understanding of markets, and just complete view of everything that's possible.
Very good.
Hello, my name is Jose. I'm from Dominican Republic, doing the LLM in banking and finance. And in my last 3 years back home, I was having exposure to the capital markets, more in corporate governance matters, and want to learn about the transactional side of securities regulation.
Very good. Yeah, we won't be doing a lot on the corporate governance side. We'll be leaving that. This is really more on, as you say, the transactional and trading side.
Hi, my name is Lev from Amsterdam, Netherlands. I'm also in the banking and finance course, and the same reasons here is to get a global understanding of the regulations in security markets.
Excellent.
That's all.
Yeah. Don't worry, we'll have, it's more or less an equal opportunity treatment on crises, so you guys were just first.
Hello, my name's Archie, and I'm doing the corporate and commercial LLM, and I saw it and I thought it looks interesting.
Very good.
We're here, it's okay. I'm taking this course because I had a couple of opportunities to deal with consultations of clients involving chiefly on equity securities. So I wanted to get insight into this field.
Very good. Okay.
Hi, I'm Nazim from Pakistan. I'm doing corporate and commercial law. I've worked in the corporate sector for a while and just want to deepen my understanding of the financial markets.
Hello, Yorgos, I'm from Greece, and I took this module because I think it's important to understand the financial market, like Sergio said, and I find it really interesting.
Good.
Hello, I'm Anais. I'm also from Greece. I'm doing the commercial and corporate LLM, and I'm very interested in financial crime, so I'm very interested in learning how the markets function, and that's why I took this course.
Yeah. Yeah, as I said, when you talk about these areas, crime is always present, and so we'll get a fair range of interesting stories and examples.
Yeah. Hello, my name is Alex. I'm studying LLM in commercial and corporate law as well. I chose this module because I had an interest in securities and I wanted to start from somewhere, so I thought that was the best course to take.
Sounds good. Yeah.
Hi, I'm Tatiana. I'm from Greece as well. I'm also doing corporate law as well. So the whole story is I used to work in litigation back home and I hated it. So I opted for, I want to be a corporate lawyer now. So I'm taking this class because I find it genuinely very interesting
Very good. Yeah, nope. Escape from litigation is always a good reason.
Hi, I'm Alkistis. I'm from Greece. I'm doing the banking and finance law LLM, and I'm going to go into corporate law, so I think that this module ties really well with the material.
Yeah, very good.
Hi everyone, I'm Karen. I was born and raised in Dubai, UAE. I took this course, this module, because I recently started a job that sits right at the heart of this. So it's at a company that buys and sells data for financial markets.
Nice, yeah.
And so a lot of our clients are, the security, the exchanges that you listed. And I just felt that it would be good for me to, familiarize myself and just make my job easier, really.
Yeah, no, it'll definitely be
Especially
relevant.
reviewing the contracts and all of the legal terms, and it can get quite overwhelming. So I'm looking forward to getting some clarity.
Excellent, yeah.
Hi, my name is Momina, and I'm originally Pakistani. I was also born and raised in Dubai, and I'm currently doing the commercial law and corporate law. Honestly, I'm also escaping litigation, so I would love to go more into the transactional side of commercial law, and I've also always had an interest in financial markets, so that's the reason I'm taking this course.
Cool, yeah.
Hi, I'm Hazel from Vietnam, and I'm also taking the corporate and commercial law. I'm taking this course the same reason with her. It's the compulsory electives, and I didn't like others. And also, I think it's like something new to learn because I haven't had the chance to work with this at all. So.
Okay, good. It should be fun.
Hi, my name is Ananya, and I'm doing corporate and commercial law LLM. And I did this subject in my undergrad, so this subject really interested me, hence I chose this subject.
Excellent, good.
Hi, my name is Anakshi. I'm doing banking and finance position. I think this subject complements well with the financial markets, and I like the volatile nature of the securities.
Very good. Yeah.
Hello everyone, I'm Sarah from Saudi Arabia. I'm having the LLM Finance now as well. I'm taking this module because I believe it gives me the transactional and operational overview about the financial market. And like the first semester I was having the regulation of financial markets. It gives the full picture.
Yeah, good. And it's a very interesting time from the standpoint of Saudi as well, because the capital markets are developing so fast. So good.
Hi, I'm Rushika, and I'm doing my banking and finance LLM from here. I am also originally Indian, but I'm from Dubai as well. And I chose this because I have been familiar with the accounting aspect of securities, but I've never really looked into like the legal aspects. So I think it's pretty different than usually see.
Yeah, no, it matches nicely. It's good.
Hi, my name is Bridget. I'm from Nigeria. I previously worked in capital markets, so I chose this because I wanted to understand more about the transaction experience. And I think it complements regulation of financial markets, which I think
Very good.
Hi everyone, my name is Maya. I'm from Nigeria, and I'm doing the MSc. I chose this module because I have an interest in the banking sector and the financial markets.
Good.
Hi, my name is Ariana. I'm pursuing the LLM in international law. Specifically, this module will be to expanding my perspective on commercial law.
Good.
Hi, I'm Shadwin from Lebanon. I'm doing the LLM in corporate and commercial law, and I'm interested in financial markets, more specifically in transactional practice. And I found that securities play a huge role in transactional practice, so I wanted to deepen my understanding of securities.
Very good.
My name is B. I came straight from undergrad, so I haven't really had like a legal or anything. But I kind of wanted to get into like compliance and risk. So that's always a good to take. So I do have regulation and compliance.
Okay. Yeah, no, we'll definitely, as I said earlier, we'll hit some of these from the risk and the compliance standpoint, in addition to the transactional side, because in many ways the things go together. So, yeah, cool.
Hi, I'm Mustafa. I'm from Pakistan.
reason I picked this point was because I also wanted to escape litigation. So the next best thing was to understand the financial services market. So yeah.
Very good.
Hi everyone, I am Andrea, I'm from Brazil. I'm also doing the LLM in commercial and corporate law, and I took this model because I work with merger and acquisitions in the capital markets, so it's a good opportunity to learn more about the UK, the European, and the US financial markets and regulation.
Yeah, very good. Yeah.
Hi, my name is Ito. I'm from South Korea. I am a South Korea lawyer practicing in the M&A sector. I deal with, I'm currently handling with securities full time, doing M&A transactions, but I realized that I've never actually studied deeply into securities regulations, so I felt it is a good opportunity to join this course. That's why I came.
Yeah, welcome. Sure, got you well. Ah, sorry.
Hello, Professor Douglas. I'm Shashwat. I've worked for like 4 years in India, 2 years in litigation and a year in transaction. That's why I chose to do commercial and corporate law. I want to escape litigation as well. And I have an inclination towards transaction work, and securities is a module which interests me and complements the transaction environment I want to create. And hence the reason looking forward.
Yeah, very good.
Hi, my name is Maria. I'm from Colombia. I'm from foreign investment fund, so I found this like course really interesting and financially informative.
Very good.
Hello, my name is Daniel. I'm from Colombia, doing the One Finance program. Before coming here, I was working as a transactional attorney, mostly on project finance, but also on capital markets. And I want to transition more into capital markets, which is why I think understanding international security regulation will be really helpful for my work.
Very good.
My name is Arun. I'm from India. I used to work in PE back at home. Basically, looking to go because I want to have a better understanding of how the market works in the UK.
Yeah, no, we'll be definitely looking at debt market structures, so yeah, good.
Hi, I'm Fania from Greece, and I'm doing a corporate English LLM. And I chose this course because I wanted to delve into the securities regulation because I would like to work on the M&A sector. So I thought it would be a good start to familiarize myself with the basics.
Yep, sounds good. And this course is quite complementary to the M&A course as well. The two often go together. Yeah.
Now I'm doing the commercial and corporate law. And the reason I want to choose this module is because I used to work on the Master of Financial Law in China, and now I decided to continue studying this area and maybe trying to be a securities financial lawyer.
Sounds good.
Hi, I'm Rebecca. I'm doing LLM in corporate and commercial, and I chose this subject because I didn't want to do litigation. Secondly, because that subject actually complements with financial markets and AI, the new era down.
Yeah.
So
Yeah, now on the AI side, this is something that we will pick up, and it should be quite complementary to that course. Yeah.
Hello everyone, my name is Pratyush. I'm pursuing corporate and commercial law, and I have a strong interest in mergers and acquisition, and to understand that better, I have to understand how markets work in the rates environment. So that's why I chose this.
Yeah, very good. Nice match. Yeah.
Hello, I'm Dino. I'm from East London. I'm on the commercial corporate. And the reason I picked this module is because I know absolutely nothing about it.
Good. Well, the key is we'll see whether after this first day whether you want to learn more or whether you've had enough of it already. So hopefully we'll see you back next week. This is a good one from the standpoint of London because it's a big sector of employment, both in the sort of banks as well as in the law firms. Yeah. The good news is actually the UK markets are starting to pick up a little bit. So it's been a bad few years, but optimistic. That is not a bad reason, actually. Sometimes I'm used to often hearing someone, almost every year, someone will come from the trading side, and basically they want to know why the compliance people are always telling them they can't do stuff. And so they're taking the course to learn exactly that. So investor is a good one.
Hi, I'm Sneha and I'm from India. I'm doing commercial and corporate law practice. So the main reason I chose is because I've always had an interest towards corporate and financial markets. I want to know more about security laws, and it's the reason I chose.
Good.
My name is Shambhavi. I'm also from India and I'm also doing commercial and corporate law. The reason I took this subject is because I'm trying to, I hope I'll be able to pursue a career in this field.
Very good.
Hi, my name is Ramesh from Thailand. The first reason I picked this is because it's compulsory. The second reason is it's good for like personal wealth management because like investment in Thailand is not so good. So doing it offshore directly or Norway and loophole value would be great.
Very good.
Hi, my name is Nati Sanju from Thailand and same with the commercial and corporate program. And the reason I picked this program is one is compulsory, and second is like I have done internship in capital market and I find quite relevant to my experience, so I picked this study.
Very good.
Hi, my name is Anata, also from Thailand. I'm also doing commercial and corporate law. And the reasons I picked the module is because it's compulsory and I also find it interesting. And I want to understand like capital markets as a whole.
Yeah, excellent. Yeah, very good. And this one is, you'll see that already, that it's different from the sort of regulation of firms, the sort of prudential side. This is, the market approach is quite different, very different reasons and approaches. Okay.
My name is Mia from Japan. I'm doing LLM in banking and finance. I'm a public servant in financial services. And I'm interested in disclosure and insider trading regulation. That's why I chose this.
Yeah, very good. Yeah, very good.
So hi, I'm Kelsey. I'm from Vietnam, and I chose this course because I want to have a deeper knowledge of financial market, and I saw like other courses merger acquisitions, so I think it's very
Yeah, definitely. Yeah, good. Cool. Yeah. Yeah, very good. Yeah.
Hello, my name is Rita. I'm from Luxembourg. I'm just curious about the
Yeah. Luxembourg is center of infrastructure, so yes, we'll see some of this.
Hello, my name is Shala, and I chose to take this course. I'm doing the LLM in banking and finance, and I chose to take this course not only to get like a broader understanding of financial markets, but like actually what knowledge to work in the system as well. Considering that I'm also looking at my age, and this is something that I want to pursue.
Very good. That's Yeah, I think fantastic breadth and interest. Just by way of introduction, my name is Douglas Arner. You'll meet Daniele next week. I've spent the past 25 years at the University of Hong Kong working on very similar issues. In the context of capital markets in this course, I spend a lot of time working with the international organizations like IOSCO on the development of international approaches, international standards, and I spend a lot of time working with individual countries, including quite a few of the countries you all are from, on issues of capital market development in order to support wider capital formation and growth objectives. So, one of my favorite subjects, and one that I'm always happy to talk about, so I'm very glad to have a good group of you from many different places to be able to talk about this over the coming weeks. So, welcome everybody, and hopefully we'll see you all next week. Thanks.
Thank you. For you, it was a long day. It's okay. It's fine. Thank you.
Yeah, you too. Hey.
I wanted to ask if there are any recommendations for books related to.
Yeah, I mean, you've got in the syllabus, you've got a list, and kind of the challenge with the books is they all take, most of them take sort of jurisdictionally based perspectives. Thanks. Yeah, others take a bit more broad. If I was going to recommend one that is maybe a good balance, it's the John Armour Principles of Regulation book. Knowing from last night's discussion you want something with a bit of substance and content, yeah, that's where I would start. It's Armour, Armour, Principles of Financial Regulation. You're welcome.
Thank you for the first lecture. What would you recommend for a student like me to understand the subject in depth so that I can use this practical knowledge in the real world? And plus, how can I perform well in the exams for the curriculum aspect? But then overall, how to develop oneself in this field?
Yeah.
What should your guide?
I mean, we'll give you sort of recommendations each week on things to look at, and then at the end we'll give you a pretty clear picture on. And because of the structure of the essay, that you've got sort of 4 or 5 topics and you pick one, there's a fair amount of likelihood that if you know what those are going to be, you can then pick the one that is most advantageous for you. And we'll talk about structuring approaches, etc.
And one last thing, when you go into the real world in the market, when you apply the regulations that they impose for the transaction or for that market, I don't know why there is this second question which comes into mind, whether should we take this approach or not. Is it just because of the regulations that say us to do that way, or plus we feel that there is a loophole which can be taken out? So how do we tackle those situations?
I mean, that's something that, part of this course is kind of understanding why you have systems. And sometimes that will mean that it gives you ways to think about how to do things in a different way that may be cheaper, easier, better. But it also gives you a sort of consciousness of, the sorts of things that the system will view as inappropriate, and therefore the risks of doing those. So it's, it's case by case. Yeah.
And the classes is going to be like that, where we'll have real life examples to solve further down the line.
Yeah, exactly. Yeah.
Looking forward. Thank you so much. Have a
Yeah,
good day.
you too.
Professor, thank you for the lecture. I would like your opinion on one specific thing. I'm working on a paper on how to announce cross-border capital and liquidity transfer within banking groups in the European Union. So analyzing all the, let's say, limitation on the different types of capital and transferred within the banking groups and different solution, how to announce, for example, leasing proposal, liquidity pool. But I think, in my opinion, there's still missing a part. So I would like your opinion, specifically on securities regulation, probably, because I'm more concerned about supervisory resolution and also the new objective of competitiveness. I think, in my opinion, this would help a lot. But I don't know, something missed in the securities regulation part. I would like to.
Let me think about that one a bit, and I'll
Also,
keep
if you
that
can
in-
suggest
Yeah.
papers, I don't know if you
Exactly.
brought in colleagues of you.
I'll keep that in mind as we're sort of going through. So yeah,
Thank you very
yeah,
much.
exactly. Yeah, no, thank you for that, and thanks for
No,
raising it.
thank you.
Because otherwise I wouldn't have. So yeah.
That's you.
Hey.
I was curious about your perspective on something. So I do like individual research outside Queen Mary
Yeah.
on the AI bubble.
Yeah.
I was flinching a bit with my face when you talked about it.
Yeah, yeah.
But I didn't want to interrupt
Yeah.
you. So it's not rocket science, but I figured out that, for instance, OpenAI got bigger investment than their revenue, so that's a big problem, especially this year. So they might be in 2026 this year, they will be bankrupt.
Nice.
Without external or new
Yeah,
investments.
exactly.
But the problem is, in comparison to the credit crisis in 2008 and 2007, is that we heavily rely on those products.
Yeah.
Even though law firms and investment banks incorporate AI functions.
Exactly.
What happened if it impacts the public? The governments may help them to fund them, which can indirect or directly cause a new worldwide crisis without a solution, because we have no regulations yet for AI. I mean, we have the AI Act, but that is just
exactly.
symbolic.
But yeah, no, this
So
is
I'm
something
curious
that,
about your.
Yeah, no, it's something that we're
Or
seeing
it's
some.
maybe not something where you're really involved in.
I mean, I related, and certainly I expect that across the course of the semester, we'll have a range of discussions around AI, whether it's a bubble, what is happening, etc. And who knows, something may happen by the end of the semester. It often does. So it's a topic that we'll keep coming back to.
But do you think there is a turning point? We're
I mean,
too
this is-
late, since all the institutional investors, such as pension funds, where we as individuals really rely on, invest heavily amount of capital, and there's no way back, because they already spent their money, and we use the products, and without the products, law firms may collapse.
So this is something where one thing that we'll see is often in securities crises, what matters is whether there is a linkage to debt. And last year in AI, there wasn't really. But over the past year, we've had a huge increase in debt. And so that raises with it real risks. There's a question from the AI side about whether or not now there are enough alternatives that if one firm did go under, there would still be enough. But there are also discussions around this question of would we see a bailout in some circumstances, which is once again an open question.
Yeah, which we're gonna discuss.
Yeah, well, we'll see kind of what happens a bit too.
Interesting.
So,
Thank you for
and it is this topic of market intervention. It's something where we will see some examples where it has worked and some where it hasn't.
Very interesting.
Yeah, exactly.
Okay.
So, good.
See you next
Yeah. Hey.
We're on the Land Finance program, and
Yeah, yeah.
one issue with the program is that we don't have that many credits to be allocated to our law modules. We're trying to load some credits, but we're not yet officially
Yeah, yeah.
registered on
Okay.
securities. but we wanted to ask you if eventually we can find enough grades, it will be okay for you to allow us to audit.
Yeah, no
classes.
problem at all. Yeah.
Oh, fantastic.
Yeah, most welcome.
That's very interesting for us.
Yeah, no,
Great.
definitely from the standpoint of the law and finance, it is actually interesting. And a lot of the approaches will be, in fact, sort of law and finance approaches. And in many ways, actually, law and finance gets more embedded in this context than almost anything else. Yeah.
For sure. Yeah.
Yeah. I'm looking really forward to it. I'm really interested.
Good. So yeah, if you can't find the spaces, you're welcome definitely to audit, etc.
Oh, thank you a lot.
Thanks, guys.
And in that case, should we email Daniele for the materials maybe, or yourself?
Yeah, you can email one of us, and we can try to add you even as an audit.
Okay,
Yeah,
perfect.
cool. Thanks, guys.
Thanks.
By the way, what's your name? Meiva. N-E-E-V-A. It's French. But you can call me Meiva. And you? Yeah. And what area are you doing? Okay. Yeah, I think most of the people will be there. I'm in the general area. So I'm doing basically everything language. So I do human rights, environmental law, and business. Which is a nice mix of things. Thank you for like telling me the direction of the class.
Oh no, it's fine, it's fine.
And how was it? The seminar on AI and regulation.
It was better than expected. Quite a lot of the round table. They said there'd be a round table discussion at the end, and there was actually a round table discussion. Everybody had a lot to say, but the discussion level wasn't as high as I feared.
I thought like it would be like a very tasty. So this is so cute about like the checks. It was quite very
Yeah, I was a bit afraid of that as well, honestly. But when everybody actually started talking, I found it. I did actually have that much time to prepare. Found some things I could say, and professor, she was a bit of a strong accent, but she's quite nice. She said that like if you don't want to speak or if you like missed out on some points, you can like type out an email after the class that summarizes your points within 150 words of email back to me, which was quite nice. Yeah. Yeah, really. She encouraged me not to give up on my fee appeal, and yeah, overall it was less scary than I thought. How about you? How was IT in software?
I did not have like any IT courses in my background, so okay, it was not a good experience with much because I did not enjoy. Yeah, because there are some aspects about the software. Oui, je suis dans mes opinions. Voilà, en fait, c'est juste pour avoir des infos, mais je ne sais pas si je sais pas si je suis partie pour un truc. And also, I took the cybercrime course.
That already I think that's already happened, right?
Yes, today. This was
How was that?
It's more quite technical.
first time I saw Alexa was when I went to Canada and saw Alexa there. Because her plastic was green. Oh, this was quite challenging.
Now, things are moving much.
Have you ever thought, are you considering like changing it? Hopefully this one is fine. Oh, I can't believe it. I relied on that really crappy Excel spreadsheet. See, what was our next like? Oh, shit. Did you go back? Oh, no. But the professor for that module is the same as the professor for the 7th grade. So, yeah, don't worry. She says she marks straight. I don't know if she actually works straight. I'll say she'll use like the whole range of marks. From like 0 to 0 to 1. But all in all, I can see she's quite nice.
Yes, all of the passing classes.
What else?
No.
What are you doing in this semester?
I did, I was doing,
How about
before I actually changed.
Fair enough. Yeah, I heard your room. I bumped into my friend on the first day actually. I was also looking for the investment course.
Was I?
She was just like, where is it?
Oh, yeah, and then it was not basement medicine.
It's in the basement. I usually sit around there. Can be this, but it takes a bit of heavyweight. Move forwards.